your view on the market's activity we're currently seeing.
Well, thank you very much, Alishia. It's a pleasure to be here. Friday, we closed better than earlier in the week. Previously in the week, you would expect there was a lot of market correction on some even banking stocks after the announcements and the pressure on the same had died off. But towards the end of the week, the market seemed to be doing much better. On Friday, however, it was mixed reaction on both sides, but at least we closed on the positive side in overall over the weekly average.
Mm-hmm. Taking a look at Safaricom, I touched on it earlier. I mean, that really one of the stocks that spurred things along on Friday's session. What do you make of the kind of upside we're seeing on the share price now, that share price sitting at that initial IPO price of 5 shillings?
Well, Safaricom has had an interesting run this year. Initially, investors were wary of Safaricom because of the price wars that was in the market after the government licensed about two other players. So now we have 4 mobile service providers in the country. And then now they went into price wars, such that the value that Safaricom was getting from the market was not as high as previously. But over time, and after they made the announcements this year of their profits, it has occurred to everyone that they are resilient and they are going to make value or create value from other lines of business, not just voice. And so this has made it very attractive in the market, especially now after it did its half-year results and it looked attractive. And then the rally began in earnest from there, and we expect this to continue in this coming week as well.
We've heard this story so many times before, William, though, and we've always seen the share price hit that 5 shilling mark, and that 5 shilling mark has proven to be tough resistance. So what do you make of the sustainability of a price rise beyond the 5 shilling mark?
Well, obviously, after a while, when probably supply exceeds demand, although as we're speaking right now, the demand for Safaricom is still high, and so I expect it to rally even further. But obviously, after the supply side increases, you would expect that the share price will correct itself. Now, as to whether we will go back to where we started, I don't think so. I think this is sustainable in the long run, given that they have shed off the pressure in the market. They have strategically positioned themselves in the market. I don't think that they are going to go as low as 3 shillings 50 cents after this.
Okay, well, let's move on to another stock you've got your eye on this week, and that's Kenyan. I mean, we've had the company seeing Barclays and Absa now standing behind financing of its expansion program in Kenya itself. What do you make of this counter and its expansion strategy moving forward?
Well, with the expansion of the production, because they only have essentially one client, which is KPLC, if they expand their production, the KPLC will still absorb what they have produced. And they are looking at going geothermal, they are looking at going beyond hydropower. And this financing will enable that. And that would essentially mean more money for the company and more money for the investor. And so this has made Kenyan to be attractive in the short run, considering the fact as well that the performance of the counter has not been something to look down upon. And so I would expect to see the reaction in the market on the counter concerning these facts.
Would you be a buyer in Kenyan right now?
I would buy Kenyan right now.
Okay, well, as simple as that. Let's move on to CFC. I mean, we've had the banking sector stealing attention with their financial reports having been released. And during the first 9 months of the year, we had CFC Stanbic last week show that its total interest income increased by 57%. What kind of stride, though, is being made on the non-interest income front? Because that will lend to its sustainability story moving forward.
Well, CFC Sternbeek has an interesting story to tell. I mean, after the merger, we were hoping that the results would be much more attractive than what we are getting, but that has not been the case. However, with the increase in its income, then we're looking at it from a different angle, like can this be the beginning of new things in CFC? That said, I have not seen a keen effort from CFC Sternbeek in terms of diversifying their product range so that they have an income that is beyond the interest income. And given that really their expenses have been very high compared to what they are generating, it's something that we are still looking at in terms of can CFC Sternbeek turn around, and that is still not being proven or shown by the management of CFC Sternbeek.